Moving on swiftly to our next panel. We started off today early on with the House of Rockefeller. We now have the House of Rothschild and the House of Morgan as well. So some stellar names in the world of wealth and in the world of finance. And I'm delighted to be joined by Maya Prabhu, who's the Managing Director and Head of Wealth Advisory EMEA for JP Morgan Private Bank. Welcome, Maya. And also to Olivier Tremeau, who's Group Head of Wealth Solutions at Edmond de Rothschild. Welcome, Olivier. Let's start off with an easy starter, which I'll throw in a little spanner in the works in. Can you each tell me what you think that 3 key things that ultra high net worth investors are focused on today, and how are you as wealth managers and advising helping them? And I'm just on top of that, given the discussion we just had, and to square it off, if one of those 3 key things isn't investing in digital assets, what's the house view on investing in digital assets right now? Maya, maybe you can start us off.
Excellent. Thank you, Clive. It's great to be here. And what a fascinating conversation. I really found it super interesting. So what are clients thinking about at the moment? Number one is clearly tackling the volatility in the markets, thinking about the current cycle, thinking about the next cycle, positioning themselves, thinking about the risks that the volatility poses to their assets, number one. And number two, also looking for the opportunities. Clearly, when things are up in the air, they also offer opportunities. So what is our role as wealth managers within this is clearly speaking to our clients a lot, thinking about all of our advice really stems from what are the goals for their wealth? I mean, ultimately, money is a means to an end. So for them, is it about growth? Is it about preservation? Is it about, freedom and security? Is it for their kids? Is it for charitable causes? So really anchoring all of the advice and putting the context of the markets within that and taking a long-term view. We're big subscribers to that. I'd say the second thing that's on their minds is planning for the future. Their life's work, the fruits of their life's work. What is it for? Who is it for? How do they wish to hold it, protect it, transfer it? And all the strategies that come from that. And that's something that my team and I think about and focus on a lot. And that's what we support our clients to think about. And the third area is sustainability. So sustainability as families of wealth, as business families, sustainability in terms of their investing, and also looking for new opportunities that the green economy can provide. So I'd say those are the 3 big things.
You can try and swerve the digital question that I asked you.
I think our sort of chairman has spoken quite eloquently about his views on digital assets. So I won't try and summarize that. But clearly, it's something that is becoming important. There are things we think about there. I guess I would speak personally. I don't lead our investment team. Is it for growth and speculation? Or is it there thinking about your goals as a store of value? And that's the kind of question that I would lead with. What is the role that you wish it to play within your portfolio? And then we take it from there. And then there's the security of holding the digital assets, which really keeps us up at night a lot.
Yeah, thank you, Maya. We'll come back to a lot of those points over the next half an hour or so. But Olivier, just from your point of view, the key things that you're talking to your clients at the moment.
Well, they're not very different from what Maya said. And I think most importantly for ultra high, because that's what we're talking about. And for our shareholder, it's more to put things on the long term. So we really focus on trying to have a view on what we see as the last 5 years, an acceleration into everything. And for families that have been here for centuries, like our shareholder, it's a challenge because you have a certain pace and generations, you can anticipate that. We're at the 8th generation, but now things accelerate everywhere. Would be in your business, in your family, in everything happening. And that's very much something that the families we're talking to really have a hard time coping with, is acceleration. So that's one thing. The second thing is alignments. A lot of our clients and even our shareholder are really looking at for new ways of aligning themselves with their businesses, with their employees, with their shareholders. And that's a very key element of the future, is how do you align? What company, what incorporation do you take, what funds you invest in, who is your wealth advisor, and how is he remunerated. That's a key element of alignment, and the top families that really are challenging and innovating into that, and I think it's very interesting. Last thing we wanted to discuss is still something very important in this world, because what we've described in the digital world, and I'll jump on the digital thing afterwards, is privacy. And they are challenging with privacy because we have, of course, regulators. I'm not talking about secrecy. I'm coming from Switzerland, but I'm talking about privacy. We have regulators. We have we have the Google of this world. We have everything, and we have to protect some people from the views of others. And that's something that's at the heart of what we do as well. So privacy is still very much of a concern. So that was your question. Now, for the digital, I think our shareholders share what your CEO says. So I think we're very cautious on highly volatile assets because we think that it might be the future, but it might not be the right time. And we're doing wealth management, and at the heart of wealth management is capital preservation, and therefore it's a high risk. So we look at it as custodian, because as a bank, we're custodian. We have to be able to custody some of the value that the client has taken. Would it be a painting, a car, or something like that? We do that. And therefore, digital assets, is that if it has value for a client, then we would think about custodian this value. But cryptocurrency as such, or highly volatile assets, are not at the heart of our asset or wealth management.
Thank you, Olivier. Early on in my career as a journalist and editor covering the private banking industry, I was told by a senior private banker the hardest conversation to have is when you've lost your client money. And that seems to hold true in the private banking sphere. This is a difficult environment in which to make money. Stock markets are now falling. Real interest rates, as we heard earlier, sharply negative. What can a wealth advisor do in these circumstances, and what's the advice that you are giving to your clients? Olivier, maybe you can start on that.
Well, first of all, I think what's very important is to keep the transparency level you want to have with your clients. So, of course, you have to communicate. Things are going wrong. Don't hide yourself. Don't think about excuses. Explain. Try to have the client invested in the right thing. We're doing that on a daily basis. Having the right diversification. Look at what's the opportunity, because no, everything is not going down. There are some things coming up. So I think it's just about the level of dialogue you have with your clients. And I like to say, and it's not always the same, and we have different clients, but let's say we succeed at Rothschild when performance is not the main topic of the performance of the portfolio. The client should be confident enough that basically we should look a bit ahead of the storm, and we should really think about things longer term. That's
Same for JP Morgan?
Yes, absolutely. And as I said earlier, it is, so the communication is key. And thinking about how we're positioned in the current cycle, how we anchor to the client's goals, and helping the client to think about the long term and not panic immediately because there is noise in the markets. So I think it's a level of trust that we build and across our franchise as advisors, but also as a firm. That's key at this point.
Okay, thank you. Moving on to the role of family offices and the next generation. I think it was a recent survey by Citi of its family offices, and it said that 1/3 of family offices see managing the transition to the next generation as their biggest challenge, and less than half feel that they're fully prepared to do so. So how should they approach the issue of succession planning? Maya, to you first.
Yeah, it's a really good question. And the thing to remember is that there is a family that goes with family office. So what is people focus a lot on the hardware side of it. How are we going to hold it? What kind of trust do we have? What's the structure of the family office? And those are really important questions. At the same time, it's really important to think about where's the family? What are the family's goals? What are the next generation's goals? And it may be different. To give you a couple of examples that are sort of quite different. There's one family I'm working with at the moment where they are considering the transition of their family office. They have an operating business. The patriarch currently and the matriarch, they invest mostly in discretionary types of mandates because what they're interested in is their operating business. That's where they really focus their efforts, and they want wealth management firms to take care of the other side of it. Now their children are coming on stream. They are super interested in private ventures. They want to invest in private businesses. They have expertise in certain sectors. They think that they can add to it. So what the family office is having to evolve to is being able to do both. And again, reconfiguring what are the goals for our wealth in the next 10 years, and how can these two approaches sort of suit that. And a second example is kind of the opposite, where I have a patriarch who's very interested in trading, and he's on the phone to the wealth manager all the time, and he loves sitting on boards of private businesses that he invests in. Turns out his children in their 30s have completely different interests. One is an actor, the other is into interior design. They're into very different fields. And so what they need going forward in the transition of their family office is to sort of move to a more discretionary type of situation that the children can take on in the future. In both examples, two common factors. People are living longer, which is fantastic, but there's going to be an intensive and long period of generations working together. Let's call it sharing the baton, rather than succession being some sort of, here today, gone tomorrow, and it's the new thing tomorrow. So think about the 20 years of sharing the baton, the two generations working together. And the second thing is the family office itself may have to evolve. Are these the right people? Do we have the right skills? What would we need to add in order to support the family as their needs and interests and objectives evolve?
A much, much deeper relationship than just managing someone's money and providing a return.
Absolutely. Yeah.
Is that the same for you, Olivier?
I would say it's even worse for us because our shareholder has 4 daughters, and we are now in the middle of a transition. So we leave it inside out, let's say. With that, we like to take advice on that. And as we've, again, been around for 3 centuries, a lot of our clients come to us and say, what's the recipe? And how do you transition? And we don't have a recipe as such. I think everything that Maya said was exactly right. What it's important for us is, of course, you have to bring the next generation to the table. So that's very important in the Rothschild family. So as early as you can, you bring them to boards, you bring them to the business meetings and everything. That's very important in order to see how is the new generation looking at the business, because that's very much engaging them very early, if they want to do or if they don't want to do it. And the other thing which is very important, and again, it's more long term, is the right to fail. It's very important in families, because you have a successful first generation. It's very hard to live for the second generation, third generation, because they want to innovate, but they're never going to be as successful as the other one. So we really much talk with these families as a transition in order to give them the new generation empowerment and the right to fail, which I think early empowerment and the right to fail in order for them to be themselves rather than just try to hide behind their parents' shadows.
And to add to this, I mean, the secret sauce and the secret recipe is to be intentional about it. So what we learn from families like your owners and many others that are in 3rd, 4th, 5th generation is that it doesn't just happen. There is a plan, there is thought, there is the empowerment, there is the engagement of the next generation. And the most important part of the succession is the development of an entrepreneurial spirit, which doesn't mean that everyone's going to go off and start new businesses, but it is the entrepreneurial way of thinking of how do we actively engage with and steward our shared assets. So yeah.
It's very important, and I'm happy you mentioned that. Always say that the most important thing is to keep them, well, that they can earn money, that they don't inherit money, that they're comfortable enough to be entrepreneurs and to earn money again, which is key.
We heard earlier from Dujan from Huobi that, already, even though he's a relatively newly minted wealthy person, he's thinking about philanthropy. And he's thinking about how to make an impact with the money that he's made. It seems to me in the last 10 to 15 years, there's been a big change that philanthropy and investing have come together. And we might get on to the more issue about sustainability, but Olivier, maybe you can talk to us a little bit about the own Rothschild experiences of this, as well as the way that you now apply it more broadly to your clients.
Yeah, what we see here is very important because it's again an acceleration of things. So the current generation, Benjamin and Ariane de Rothschild, inherited about a legacy of foundations and philanthropy that they totally changed 12 years ago into venture philanthropy, being very, very, let's say, we very innovative into their philanthropy, which was very much what was done at that time. And we can see now that our shareholder is much more cautious with philanthropy, saying that he thinks that it's too remote from the current concerns and the urgency of the situations. And therefore, we are looking at shifting that and converging, which I think is quite important, innovative, our impacts, but real impact first, and philanthropy together in order to maintain the level of let's say, entrepreneurship that you have in the impact investment because it's more private equity run, and the philanthropy innovation, the innovation that allows philanthropy because you can do things in certain fields, in certain societal fields that cannot be done within the private equity sector. So that's very much this, what we call impact first. So let's say that we will not have all, of course, not at all the returns we should have in the private equity field, but we will have the innovation and also the impact, the social impact we want to have. And I think, and that's coming from the daughters of Ariane, it's the social impact they want to have and they due to have considering the level of urgency and need that there is. So that's very much where we are. So we see this conversion, sorry.
It's interesting as well, Maya, that at OMFIF we look a lot at global public investors and the assets they have under management at the moment, I think of $42 trillion. But these are quite slow-moving institutions. It takes them a while to change their investment approach. So the wealth pool last time I looked at it was something like 46 trillion, so a similar size. And yet the ability of wealthy clients to shift their portfolios to think about change in sustainability and impact investing, they can react more quickly. So are these the sorts of clients and the investors that can really drive the move forward in sustainable finance and investing?
Yes, and they are. And it's a great opportunity for the family as well. So when I sort of first started in this field in wealth management, and I won't mention the year, it used to be that clients would say, I do my philanthropy like this, you know, my values and the things I care about and all of that stuff. And I make money like this on the other side of the world, and it's maximum return. And then the profits from that I'm going to give away here. And so you may end up with a situation where on the one hand, you're giving money away to support environmental causes and conservation because we went on holiday to South Africa and we love conservation. And on the other hand, we're making money in a way that is kind of causing conservation issues. So clearly what has happened in the last sort of 20 years is that families are realizing, many of our clients are saying, we're the same person. We put our values and the purpose of our wealth at the heart of driving our philanthropy strategy, our investment strategy, and also if they have an operating business, how we do business. So what do our supply chains look like? How do we source raw materials? And what is really exciting now is that you can line up all of these things. And when you think about impact, you can think about your impact not just through your philanthropy, which is important, but also through how you invest and how you run your business. And that is the kind of collective sense and difference that you can make. And what we're finding is that for many of the younger generations, they're excited to be part of this kind of journey for their family.
So it's often the younger generation driving this?
Not exclusively, but yes, they are very interested in it. In some cases, they are absolutely driving it.
Thank you. Please.
I don't know.
We have been running a tight ship today in terms of time, so but we have two great speakers here who have a wealth of experience in the thing. So I want to open it to the floor to see if there are any questions from the floor. Yeah, we have a hand immediately raised over here. Do we have a microphone to come over here? Or if you've got a booming voice, you can shout it out.
I'll try to project my voice, I guess. Thank you so much for your talk.
Thank you.
Hello, great. So my name is Klisman Marati, founder of Pray to Economics. And the reason I founded this firm in the first place is to answer one very specific question. And that is, how will the world be changed and challenged over the next 100 years? And given this is a family office event, this question I think is more prudent to the family office space given the generational capacity. But in order to do this, we realized that family offices and other investment institutions need to better understand a framework of how to understand the world, having a framework of how the world is changing and moving and why we're seeing these changes. Because without that, you tend to focus on thematics, meaning the crisis of the day is what you focus on and try to hedge risk very short term. In your work, have you managed to develop, or do you use a framework in order to better understand how the world is changing and why it's changing? Or is it mostly thematic in terms of how you see the world changing? Thank you.
Sorry. Well, we do think like this, and we're seeing what we call systematic thinking. So basically, we're shifting from sectoral thinking to more systematic thinking. So system thinking. So we like to think about not only focusing onto the ocean or something, but thinking about what is the system around it, and therefore we think that it's going to be the next thing, and the next investment to be done is not to invest into one portion of the business, but just to think as a system, have an understanding of the system, and therefore try to impact the system as much as you can with the company you're investing or the fund you're investing. So we really are working on those systems thinking, would it be for many things, and we are funding it through the philanthropic side of the family, because we think that there's a lot of commons to be created there. We think that we need to have a shared knowledge on that in order to progress and to adapt to those changes you're saying 400 years ago. Again, just one thing to mention, it's important. Families are the only players in the market with sovereign wealth fund that can think at a 50 years lifetime focus. None other players can do that. Insurances, nobody's there. So it's very important, and we are leading that. Sorry.
Well, just to add to what Olivier is saying, I mean, one of the fundamental questions that I've been asking my clients is, what does it mean to be wealthy in 2022? And what will it mean to be wealthy in 2032, if you're looking 10 years, 20 years ahead? And some of the kinds of topics that are coming out is awareness of rising inequality, and that's down to quantitative easing, and this is all factual stuff. It was mentioned this morning as well. Growing transparency, and with it, growing reputational risk. You know, within seconds, news is out of anything that anyone can do. There is a recognition that there are global challenges. And it used to be with big global challenges, climate change or pandemics, it's the government's problem. But what we're finding now is that the government alone can't do it. It's going to need business, it's going to need families, individuals, and it's going to take the government to be able to solve it. Everyone's going to have to pitch in. And then you have there's a wonderful book called iGen, which I would recommend that you read, and by a psychologist in the US. And you have a generation that is growing with a certain way of thinking around how they consider social and environmental issues, amongst other things that they talk about. And so in this context, how do you think about your wealth and its purpose? And therefore, how do you develop the strategy that sits around it? How do you manage the risks that this raises and also the opportunities that it provides? So I think it's really trying to think quite fundamentally to the point that you're making around the world that is coming.
Thank you. Yeah, one more question here, John.
Thank you. I wanted to return to the topic of inflation briefly. One way of looking at inflation is a means for government to reduce their debt pile at the expense of fixed income investors and holders of cash. That's one way you could express it. And we know, Clive, don't we, from the GPI survey, that reserve managers don't believe the Monetary Policy Committee upstairs is going to fix inflation anytime soon. So I want to ask you whether you believe, both of you as panelists, that central banks will master inflation over the next 2 years.
Yeah, thanks. Well, this is where we need the economists. But as a non-economist and as a wealth advisor, and again, I don't focus on the investment side of it. I think what history shows, I'm a student of history. I think what history shows us is that, and also what Lord Desai said earlier, that it is very difficult for central banks to be able to master that. And so the question is, the question that I'm thinking about and asking is, what is the consumer going to do? Because is the consumer going to, right now, the consumer is spending, kind of inflation is going. What is going to get the consumer to tighten their spending? And you can say, interest rate rises is one way to do that, but I wonder if it's going to be other things, sentiment being one of them.
Well, on our side, I think it's very important for us not to speculate whether the Federal Reserve is going to be able to tame it. It's more for our clients to be able to be sure that if it happens, if the inflation happens, we're ready to adapt the portfolio, to adapt the assets in order to make sure that this is tackled. And if it's not the case, then we will adapt again. So it's everywhere. So we have to be extremely adaptive and to think about many scenarios. I don't think that one scenario is privileged. I think many can happen.
Thank you. We're nearly out of time. Just wanted to ask quickly one thing of each of you. We've talked a lot about individual families and the relationships you have with them and the advice you give them. But it seems to me when I talk to people in this world, networks are also incredibly important. And part of the role now of an advisor is to build networks, whether it's to share investment ideas or ideas on sustainability across families. So can you each, just to round up, just tell us a little bit about what you're doing in that space and how that will develop? Maya, maybe to you first.
Yeah, I think, of course, a key part of our role is to bring our clients with shared, like-minded and shared interests together because they share experiences, learn from each other, and so on and so forth. We try and do that sort of thematically around tech, around interests in healthcare, on bringing entrepreneurs together, bringing the next generation together in different sorts of forums to create that sort of shared interest, but absolutely crucially important. And I think that, globalization aside, people want to learn from people in different parts of the world. And I think that's one of the really fun things that we can do, given our sort of, quite vast global footprint.
Well, yeah, there's a very big need for connection, for social currency, as you call it now. So our clients are very keen into investing into this social currency. And we inspired ourselves from JP Morgan on the Next Generation program that you had started a long time ago. But we do it, it's the things that we try to. For us, a private bank has to be a safe place, and that's very important in the current times. So we want to make sure that things that are discussed within the group we're making would be more by generation than by sectors, because we like to mix sectors. Ensure that we have rules and common rules, that everything that is said there is a safe place, because there's not a lot of places. You can talk on many medias or social networks where you can talk about yourself, your wealth, and your failures. And I think that's important to be said, at least in a private bank, because that's what it is at the end of the day. So I'm very proud of what we've been achieving on that. Yeah.
Well, thank you very much. And please, a big round of applause for Maya and Olivier for their contribution. That was a fascinating discussion.